Now, you are also, when you do wait to the posting date and you pay off the card, it's a wonderful thing because you're getting a float on the money. You are the credit card company's worst nightmare because they don't make any money off of you.
Exactly.
Because you're paying it at the end of that month. They don't make any interest, and they floated that money for you.
Yes.
And that is exactly what you want to do in life.
Yes.
Because now you're using their money. It's the same thing that the bank does to you.
Oh, yeah.
When you bring a check in for $5,000, I know.
Tell us the secrets,
okay?
Larry.
Okay?
Tell us the secrets.
This is insane.
Thank you for joining us for another episode of Break That Cycle. I am your host, Bill Cheney, here helping you turn obstacles into opportunities. And today we're talking about everyone's favorite topic, money. And I have a friend here with me, Larry Whiting, good friend and golf partner, once a year or whatever, something like that. Mm-hmm. So you've been in the financial industry for quite some time. We'll get into that in a second because you are recently retired.
That's correct.
Congratulations.
Thank you. Thank you so much.
So you've been retired for 2 weeks now.
2 weeks.
Okay. And you just came home from a cruise.
Yes.
That was about a week or 5 days?
It was a 7-day cruise. This is the first Monday that I have woken up without a job in a very long time.
How's your brain wrapping around that right now?
So right now my brain feels like I'm on vacation. It doesn't really realize that, we're not going back in a week.
Yeah.
But it has been difficult on the couple of days that I have had filling those days.
Yeah.
Today was a little bit different and you're finding things to do.
Yeah.
And I do miss, I shouldn't say that I miss it. It's very different not having to answer 50 to 100 emails or having my phone ring all the time. My phone is extremely quiet, which is very different. So
take advantage of it while you can.
I'm enjoying it.
Yeah.
I'm going to really kind of run with it and see how it works out as I don't have a choice. And if I think I need to go back to work, I will.
I know of some really great places you could volunteer.
Yes,
I'm just saying.
Thank you so much.
I got plenty of connections for you on that.
My problem is I like to get paid.
Yeah, I'll refer you to someone else then.
Thank you.
So, all right. So, how many years did you have in the financial industry?
So I'll give you a quick background story. I am an accidental banker.
Yes.
I literally spent 10 years in retail. I spent another 10 years in consumer products. My wife had me move to Florida. The company I worked for got bought, and I got an opportunity to go to work for Bank of America back in 2003.
Okay.
So I call myself an accidental banker. But you know what? It's been 20-something years now.
Yeah.
And I've had the pleasure of working for 3 of the big ones, Bank of America, SunTrust, which is now Truist, and Chase. And I've worked for a couple of the small ones as well, with First Citrus being a very small bank, Bank of Tampa, which is a mainstay here in the Tampa market. And then the last bank I worked at was Seacoast Bank, which is a regional bank here in Florida.
Yeah. So
lots of good experience, learned a lot about finance, things that I didn't even know or understand.
Right.
So I really appreciate this opportunity to kind of talk through these things today because I think it could be beneficial. I know what it was for me growing up.
Yeah. We were talking a little bit in pre-production that we've had this conversation a million times.
Yep.
We've just never really recorded it until now. But I real quick, I want to touch on your retail history.
Sure.
Because when you told me you worked retail, my mind immediately went to you selling women's shoes like Al Bundy. Is that correct? No? Is that right?
Well, you know what? I was accepted into a management training program with Macy's New York. And actually, I worked in women's shoes.
Yeah, okay.
So that's a true story. I didn't get to sell the shoes because Macy's New York was a union shop. and all the salespeople were on commission.
Okay.
And the salespeople made more money than the managers being on commission. So I managed everything from the standpoint of taking care of returns, the stocking of displays, all the day-to-day work.
Sure.
And I learned the margins and whatnot, where the money is made, which was really, really a major plus. And I learned how to manage people, which was another major plus. But I get the Al Bundy reference, and you know what? I'm not insulted by that at all.
as just as a disclaimer to everyone listening or watching, Larry and I spend half of our conversations together just breaking each other's balls.
Yes,
so
we do.
Just get used to that.
Yes, we do.
All right. Well, let's start talking about why we're here. So I want to get into some. There's in the conversations we have had, we've both said there's things that we wish we would have known earlier in our life. For instance, me, it was credit. I had no idea what credit was. I didn't know how to use credit. My idea of never having a credit card ever in my life was my way. This way I could never be in debt, but you don't realize that you're putting yourself in a box at that point. So looking at that, what do you think are still some of the biggest misconceptions when it comes to involving yourself in the banking community? Because a lot of people are still, chock full of nuts, and I'll bury it in the backyard or under the mattress. What are some misconceptions we might be able to put to bed?
Well, I think, like I said, the first thing here, and we'll get into credit in more depth, but I think the first step in the right direction is establishing a relationship with a bank, okay? And when I say establishing a relationship, meaning to have a checking account and a savings account at that bank, I think those are the two keys. Because first of all, you've got to invest in yourself, and that's critical. And if you don't know where your money is going or what you're doing because you're keeping it in the house or you're doing it in envelopes, and I'll use the example of my mother-in-law. My mother-in-law, when I first met her and my wife a long time ago, she was keeping all of her money in envelopes. And she had them. It was a very, very organized system that she actually had.
Okay.
But at the end of the day, she wasn't reaping any of the benefits of having that relationship.
Sure.
Because if you have the ability to see what you've spent, now you're creating a budget, you're looking at the expenses, and a checking account makes you accountable for where your money is going.
Sure.
Okay. The other thing that people don't do and don't realize, and no matter how many times I say it, they still don't do it, is that it doesn't matter how much you save. Everyone always wants to open a savings account and have $100 to put in it. But you know what? When you start putting in $5 or $10 or $15, you are amazed at how quickly it turns into a major amount of money.
Yeah.
So that's the first thing I say to young people starting out all over. If you're coming out of a situation, you have to take care of your finances. Those are the first two things that I would do. I would open a checking account and I would open a savings account. And you want to get basic accounts starting out because you're not going to have the balances that are needed to offset charges.
Sure.
Okay? And savings account in this day and age are not paying a whole lot of money.
Not right now, yeah.
But that's not the point of the savings account. The savings account is so that you have what I call, that rainy day fund. God forbid something goes bad with the car. You've got some sort of emergency, a medical emergency that comes up. You'll have a couple of $100 in the bank that you can go at.
Yeah.
And I will tell you this, and as a retired banker, I literally did not keep my savings account at the bank that I worked at.
Okay.
Okay. And the reason that I did that was I put it in a place where I had to literally drive to that bank to get to the money. And I did not give myself a debit card because I wanted to make sure that I would have to get in my car or get on my 2 feet and walk to that bank and get that money. And 9 times out of 10, I figured out that whatever it was I thought I really needed, I didn't need. It was just something I wanted, and I was able to talk myself out of it.
Wow.
So that's
clever.
one of the things. So I just, that has worked for me and has actually helped in my retirement because I have funds in the bank now that I would have never had if they were still in my work account.
Oh, yeah. No, absolutely. Yep. I'm glad you brought up the checking and the savings account because we have this conversation a lot with the ladies that are in Mary and Martha House Shelter. Almost everything we do now is on that little phone, right? Or it's online. And a lot of people get the online banking accounts, and the online checking accounts, and they're there. We still promote the idea of getting a bona fide checking and savings account with a banking institution. What is your take on the whole online banking? Does it make a difference? Or are we wrong in that? Or
you're not wrong. And I think it depends on where you are in the particular cycle in your life.
Okay.
So if you have acquired funds and you do online banking, where you're literally not having the asset of having a bank there, you're talking about the allies and of the world, that's fine, because you don't have to have access to your money immediately. Because the difference when you have a savings account or even a checking account with an online banking institution like that, the reason that they're willing to pay a little bit higher on a savings account or a money market account is because you're not going to get those funds for 2 days when you request it, because they have to literally take it there. The other thing that I find is that you have to have the money to put into that account, and in order to do that, you have to be able to do it electronically. So it has to go into some sort of bank somewhere in order to be able to do that. So you need to kind of think that through. I think that anyone who's in the beginning stages or is in that moderate income, you want to have a branch that you can go to. Somewhere that if you have a problem or an issue or a concern, do that. And the other thing I would recommend is that do not allow your online banking, meaning the actual app for even that brick and mortar bank, to drive it. I still, and the bank hates me for this, I still get paper statements because I want to be able to sit there and look at it, because it's less confusing to me than trying to follow it on online banking. And I'm able to account for each and every penny that's going through. And that's accountability is a big part of this, folks.
Yeah.
You know what? You got to realize that, that $20 that you're spent here, or when you go and you're spending $3.11 every day for Dunkin' Donuts coffee, and I know that because that's what I spend. My wife goes to Starbucks; she spends $4.49. But it does add up. So take a look at those types of things. Different ways that you're able to save and cut your expenses is so critical as you're going. And if you do it now, you will get to a point in your life where you don't have to do that as much anymore. And that's a really, really good feeling.
Oh, man. Do you remember the first time you actually filled up your vehicle?
The first time I filled up my vehicle, mean my first car?
Yeah.
Oh, yeah.
Yeah.
So I can give you a funny story on that, too.
Go for it.
I got a million of them.
Well, you're old enough.
Yeah. So. It was so funny is that we had the gas strike, and this is a long time ago, guys. This is like in the late 70s.
Oh.
Yeah, late 70s.
I wasn't around for that.
You weren't around for that. Yeah, thanks, Bill. Appreciate that. But we had the gas shortage, and in New York City, which is where I was born and raised, not in Philadelphia, in New York City.
We'll get there. We'll get there.
You had to get your gas based on the license plate number, odd or even.
Really?
So on certain days, the odd license plates went,
Really?
and on other days, the even license plate went.
Wow.
So you had to make sure that you had the money
Serious?
on the odd or the even day to be able to go back and fill your tank.
Yeah.
But you got to remember, we're talking about 60 cents a gallon.
True.
All right, but still, $10 was a lot of money.
Yeah.
And at that time, when I got $10, $15, $20 for my birthdays, that was a big deal.
Yeah.
Now I got nephews, and you put $100 in an envelope for them, and they still look at you like, "Hey, you sure that's enough?"
That's it? Do you know how much Roblox are these days? No.
Exactly.
But I remember for the longest time, $5, $10, $15 if I was feeling lucky. But the point where I finally got my finances in order to where I could actually fill up my car, one of the greatest feelings I've ever had.
Yeah,
so I want to talk about some of the spending habits, because you talked a little bit about the Starbucks, the Dunkin' Donuts.
Sure.
Not that they're a bad thing, but maybe just curbing that habit a little bit. You also mentioned how you set up your savings account so that it was not easily accessible to where you really had to think about, Do I really want to pull this money out?
Absolutely.
What other healthy spending habits can you recommend to those who maybe don't even know what a spending habit is?
Yeah, well, I guess, I mean, the first thing you really have to do is you have to decide what is a want and what is a need. And that becomes a lot of people's wants are not their needs. And you end up spending money on wants that you don't, it just eats up your money.
Sure.
So that is the first thing you should do. And I really, really recommend anyone, including myself, who at this stage in his life, you have to set up a budget, okay? And I will be honest with you that it actually, I knew I was going to retire over the past 6 months and had done all the planning. And my financial planner said, no, Larry, yes, you're going to be fine. You won't have any issues. You won't have any concerns. I did not feel confident until I sat down on a Saturday and I took every single bill I had, every single expense I had, and I looked at every single one. And I actually did it on my computer, and I still have it right now, and said, okay, this is all the money that I have to spend. These are all the items that I have coming in. Social Security, a couple of pensions I was fortunate enough to have because they gave pensions back in my day when they started working a long time ago. And then that was the moment when I realized that, yes, I was going to retire and I was going to be comfortable enough that I didn't have to worry about what was going to happen with money. And if I decide that I want to go back to work part-time and get paid, I can do that, but it's not going to. So the key thing there, folks, take a moment, write down every expense.
Yeah.
Okay? And you have to ask yourself, is that, you know what? Do I really need to have a full cable package for $400 a month? Okay. Do I need all the streaming services?
Go through your streaming apps.
We have so many things that we spend money on that we don't even think about because we do it. And I'm going to use myself as an example. I have been spending $32 a month for one of these electronic protection packages that I bought because I fixed a tablet 4 years ago. I have never used that service, but yet I've spent $32 a month, and I just canceled it because I completely forgot about it.
Yeah. So, it's very easy to do that, especially when you're doing things on your phone or you're doing them online and you're not getting those paper statements.
Absolutely.
So you're not seeing it all the time.
Yep.
I mean, it's very easy. My wife and I figured out that we were both paying for the same streaming app about a year ago. And it was like, what the hell are we doing? It's just so easy to get involved with that. And I've heard of people having 2 subscriptions under their name. For the same streaming
happens
platform.
all the time.
And those are things that you're, I mean, you want to
and
talk
you know
about
what the crime is that the streaming company doesn't make you away.
We didn't see that. Just a little mistake.
Absolutely.
Speaking of budgets though, Larry, what do you find are some of the biggest reasons budgets don't work?
No.
Why do people have such hard time with a budget?
Well, I think the first thing that most people don't do is to actually sit down and put together a budget.
Okay.
And there are apps out there. There are papers that you can, I mean, literally. For free.
Don't go pay somebody to do a budget.
You have to go pay someone to do this and whatnot because at the end of the day, you have to realize that you can only spend what you have. And if you're
Until
working,
we get to the credit portion.
Exactly. Well, that's a whole nother story.
But
it's still going to tie back to having good common sense when it comes to your money.
Indeed.
And I got some stories to share on that. But the bottom line is that use those apps. Because what they're going to do is that a lot of them, whether it's an app or whether it's just a piece of paper, I will print the app because it will list all of the usual expenses of people that you have.
Yeah.
So you sit down and you're able to write down and say, okay, this is what it's costing me each month for this.
Yep.
And then you have a total. And you take a look at that total and you say, okay, you know what? This is what I can do this way. Because don't forget, you're going to have unexpected expenses.
Yeah.
You're going to have unexpected things that come up.
Oh, yeah.
I'll give a perfect example is that, you know what? I went and filled my tank a month and a half ago, and it went from $35 to $60 with all this when the Iranian war started.
Yep.
And you have to be in a position to be able to adapt to that if you have to.
Yeah.
So you gotta take the time and the energy to do that. Most of the time, I have found that most people don't want to do that, and for 2 reasons. One, we're lazy because everything is working the way that we want it to work. The other thing is that sometimes we don't want to know the truth. You know, that maybe we're spending more money than we're making. And when you actually do that and realize that, it means that now you have a plan. There's a call to action that you need to take advantage of.
Yeah.
So, and I was guilty of that as a young man.
In your time, have you noticed where one maybe expense is more of a killer than others? When we work with our budgets for the ladies that are here in the shelter, the biggest one is the car. Okay.
Absolutely.
It's very hard to get around where we are without personal transportation.
That's correct. Yep.
So they go to one of these cut rate lots.
That's it.
And their credit is already in shambles, which we'll get into credit later again. So they get hooked up with a 2005 Mercedes with 200,000 miles on it, paying $700 a month.
Absolutely.
Because their credit is just not good.
That's right. Yeah.
And it sets them back.
Yeah.
I mean, that's more than some of them. It's more than half their monthly income.
That's it. And then you turn around, if you have a repair or anything else to go along, or gas goes up in price, it changes that. And that's, like you say, we're going to get into credit a little bit later on, because that is what is absolutely critical to so many things. And the other things that you really can't control, you can't control what Tico is going to charge you. You can't control what your water bill is going to be. You know, so I mean, I run around the house all the time, turn off the lights, do this, do that, but it still doesn't make a manageable difference in my bill each month. So those are the things that you have to be aware of and be prepared, because there are going to be those instances where you're going to get a very unhappy surprise because a bill is going up, or your water bill that's normally $90. House, now all of a sudden it's $140 for whatever reason.
Yeah.
Or
leak. Sometimes you get a leak.
I $400 water bill.
Oof.
Toilet leak.
Oof.
Toilet was running. You don't pay attention, and those are the things that can hurt you in life too, in finances. That when you have a situation and you don't fix it right away, it compounds the problem. Yeah. So, and also I'll share this with you: if you're not a good do-it-yourselfer, don't do it yourself. I tried to fix a toilet in my 30s, saving money, wife, 2 kids. Yeah, we ended up getting a new toilet. So just Google it.
That is, absolutely. If it's something you don't, home projects, I have a limit. Car projects, I'm calling a mechanic.
Yeah, there you go.
I that is not my thing.
Nope.
And I've watched YouTubes. I have done the research online. I've even printed out manuals. But when it comes to the car, forget it. Yeah. You know what's weird though? Put me up on a motorcycle, I can take that thing apart.
Wow.
I can take it apart, clean it, put it back together. No problem.
That's amazing.
It's the weirdest thing.
Yeah.
For some reason, the car intimidates the shit out of me, and I don't want to touch it, right? And because the bike, I got the bike for a much lesser amount than I got the car, so I'm not messing with it.
You can be, well, the cars have changed, so there's no carburetors and the things that we could fix back in the day. Or
Not nowadays. So looking at, and we'll wrap up this segment with 2 things. One, and I'm sure we're going to say this again at some point in this episode, what is, and we've talked about it before, what is the one thing you do not default on your payments?
Well, I think there's 2.
Oh, okay.
And in my opinion, first of all, you never default on your mortgage, or your rent.
That was the one.
Because you do not want to, and I combine mortgage and rent as 2. If you are fortunate enough to have a car, and you've paid your rent and your mortgage, you pay your car note, because to your point earlier, here in this environment, so my son worked for Progressive Insurance. I live in Riverview. It's 11 miles from my development to the Progressive Insurance. Well, it used to be a campus. They just finished tearing it down. My son's car broke down. It was going to take him 2.5 hours on public transportation to get there, and he was going to have to go literally 11 miles further north and then come back. So in the Florida environment, this is not New York City. We can't get on the subway or the train or whatever and make that work.
Right.
So those are the two things that I think that you have to protect at all costs. You don't want to be on the street.
Nope.
Okay, and you don't want to be living in your car as a second option, but you want to keep them both if possible.
Yep, and I can attest to the rent/mortgage piece of it, because when we get ladies that come into the shelter and they have evictions on their record, they are a bitch to get rid of.
Oh, I bet.
It is on there forever. I don't care if you paid it off, if you got an absolve letter from the landlord, that will stay on your record and it will stay on your credit, and it will hurt you for years to come. Years to come. Yeah. Real quick before we head out, what is one maybe small habit that you can enlighten someone to start making a little momentum in that savings journey?
So like I said, the thing that I've told my kids, told my clients, is that it doesn't matter, okay, if it's $5 a week. That's $20 a month that you're putting away, okay? Yeah. By the time you get to the end of the year, and I'm not good at math, even though I'm a banker, you put together, you've got over almost, $140, I think is a magic number, maybe 160, I can't remember. Anyway, it's one of those numbers.
It's a good thing you retired.
Yeah, exactly. Well, I always have my calculator. I can calculate. I can calculate with the best of them.
Come on, you have an abacus in your office.
But I'm just saying, if you have the opportunity, don't lessen or diminish the importance of that little bit of money being put away, because as I stated at the very beginning, that this is going to grow beyond your wildest dreams. And if you do that now, when you come into your heyday, so to speak, it is going to be beneficial for you to have that habit, because that's when you'll really begin to see your money grow.
Nice. No, that's good. That's good. We're going to take one break. On the other side, we're going to be talking with Larry about credit, debt, and how all that works out. Be sure to stick around. But first, a message from our sponsors, Mary and Martha House.
Mary and Martha House is a beacon of hope. For over 4 decades, it continues to shine brightly and illuminate the path towards a better future for countless women and families in need. Since our humble beginnings in 1982, we have dedicated ourselves wholeheartedly to the noble cause of helping those affected by domestic violence and homelessness. Did you know that every day in communities all around us, 1 in 4 women and 1 in 15 children face the terrifying reality of domestic violence? Compassion is the cornerstone of everything we do. We approach each person with a deep understanding of their unique struggles and needs. We foster an environment where respect and appreciation are not just words, but guiding principles that shape our interactions and relationships. Each member of our dedicated team is held to the highest standard, ensuring that compassion guides every aspect of our work. Mary and Martha House is a place where hope takes root, love blossoms, and lives are forever changed.
Please spread the word. Help raise awareness about Mary and Martha House by sharing their mission, success, stories, and upcoming events on social media. By amplifying their message, you can reach a wider audience and encourage others to get involved or make a donation. Please remember, even the smallest act of kindness can make a significant difference in the lives of those in need.
We'll start credit, debt with a little personal story. Mm-hmm. When I got out of the military, I had a USAA credit card, maxed it out to move up to New York. I was there for a few years. Okay. On my way down, I had to sell my motorcycle just to have enough money to make it back down to Florida. Okay. And I carried this maxed out, closed out credit card on my account for probably about 3 years before I was able to save up enough money to pay it off. Yeah. Okay. But my credit was still shit. because it had been shit for a long time, not paying that credit card off, right? Thankfully, the nice people at USAA like capped my overage charges, and they're just like, pay when you can type thing, which was brilliant. And then, so I went.
And not normal. FYI.
Not normal. Okay. No, I was very thankful for them. I did get a letter from them recently. We're friends again. They wanted nothing to do with me for about a decade. So, but I went to my bank and I got one of those prepaid credit cards. Gave them $300. I heard this was a good way to build credit back up. So I took $300 out of my account, paid for this credit card that had a $300 limit. My idea behind it was to spend money on things I knew I could pay for. So my gas and my groceries. Those are the only two things that I put on it. And I made sure that I paid it off every month.
That's correct.
I was told within about 12 months I would get my money back. My money came back in 6 months. And not only did they give me the $300 back, but then they opened up a line of credit for me. So there is... And I say that because the transition from not having any credit to finally starting to build my credit opened up a lot of other doors for me as far as apartments, as far as lending rates on loans, as far as auto loans, home loans, things like that. We weren't taught this when we were kids, that any of this stuff mattered, right? The big bad banks, stay away from them, put it under the mattress, put it in the chock full of nuts can. And so we weren't taught any of this, and we had to learn it the hard way. So, but I want to go into some, can you first, because I'll be honest, I still don't fully know what the hell credit is. Can you try?
I can give you what I know.
Okay.
Because I don't think anyone really knows how this whole crazy thing works. Why do we have 3 bureaus? Okay. And you never know which one is going to be pulled. So it is absolutely, and they will have different scores. For different things. And you learn in banking, and actually it was so funny because I walked into a car dealership and my score was 20 points higher than what I thought my score was.
Okay.
But the credit score game, and I call it a game, even as a banker, it is basically a device that the bank is able to use so that they can see whether or not you are going to pay as agreed over time. Okay, so that's the big key for them, is that they get a history that way. And that's how you got to remember it, that your credit is your history.
Okay.
And that is what the bank is looking at.
Okay.
Those are the things that it's going to tell. So when you don't pay, now you have this red flag.
And now is this history starting at a certain age?
So my suggestion to anyone is when you get to be 18 or 19 years old, if you have the capability, because banks and different things will take a chance on you to open an account.
Student cards.
Exactly.
They
will work. Because then what happens is now you're building your credit. That's the upside. The downside is exactly what you did. You do not want to take that card and not pay it, because now you're starting on the wrong side of that. My rule of thumb with credit cards is, number 1, try and pay it off every month. Okay. Number 2, know what your interest rate is, because that's a driving factor. And there are other opportunities that could be out there. And I'm going to get smacked for this by my peers, but I'm sorry. The credit unions have far better rates on their credit cards.
Well, that's not a secret.
And then the other thing is that I also really believe in the prepaid as a starting out point, because it is a great way to build credit. There's no risk to the bank. Your risk is that you lose $300, and what will happen is, to your point, is that if you pay as agreed, normally they will return those funds to you. You'll have a credit rating, and they'll offer you a credit card. Now maybe it's $500 or $1,000 limit, and those are the things that you want to be able to handle. Be very, very cautious when someone, and this will happen even as a young person in 20s and 30s, where they will give you a credit card and all of a sudden you got a $15,000 limit on it, and then all of a sudden you start buying stuff, thinking, okay, I'm going to be able to pay it back. once the interest begins to kick in,
Yeah.
it is very, very hard to come from behind. So
Yes.
understand that there is your revolving credit cards, okay? Those are what carry the most weight. Then you have your car, okay? Your car, because that's paid monthly, you want to make sure that you do that. And then your mortgage or your rent, because now rent is being a lot of landlords are recording on rent.
Yeah.
And you made the point earlier, if you have an eviction on your record, it takes
It
forever
hurts.
to come out of that because it's on your report for so long.
Yeah.
And unfortunately, just like everything else, a bank or someone who's trying to give you credit is going to focus on that one mistake when they're thinking about what they want to do. The other thing, and you made this point also, but I just want to reinforce it, is that it is so driving the deals. We talked about the car situation where your credit is in shambles and all of a sudden I go to the car dealership and I get a rate and I'm going to get 5%. That same person who has a 600 credit score, they're going to be at 12 or 15%.
Yeah.
And it's not even going to be for a new car. It's going to be for a used car that's probably a beater.
Yeah.
So you don't realize the importance of credit and the score and how it can affect your car insurance,
Yeah.
okay, your mortgage insurance, because they all pull these things,
Yeah.
okay? And you got to make sure that when you're dealing with credit that you are not using it to
Party.
Yeah, well, you don't want to use the party. But I was thinking to overlive your means because
very
you
good.
have that access.
Very good. Yes.
All right? So you want to be very, very careful that you don't do that. And the other thing to think about is that in this day and age, these are things that Bill and I were never taught. And I'm a little older than Bill, just a little. But you don't realize that there are things that you should look into. And I'm going to share my own personal story. I didn't buy my first house until I was 39 years old.
Okay.
Okay? And it was because my family gave me the impression that it was so hard to get a mortgage. You know, all the paperwork, tax returns, everything that you have to do to get this house. And I laugh because I look back on it now and I'm taking this advice, but all of my parents, my aunts and uncles were all homeowners. So I'm like, well, where is this coming from? And the story is this: I'm meeting with a real estate agent. We are moving to Chicago. I want to rent. I got a wife and 2 kids, and the real estate agent says, "Why are you renting?" It's like, well, because I don't know if I can get a mortgage. I've had some problems in the past with my credit. He says, "Well, let me see." Okay, turns out my credit had bounced back.
Okay.
But the thing that was critical, or that I had my approval in one day on a mortgage.
Oh, wow.
Okay, and that wasn't because I wasn't in the 800s or anything like that at that time. I was in probably the high 6s.
Sure.
But I believed the stories that I had heard, and I never investigated the opportunity to look into it. And it was this one realtor who made me do it.
Yeah.
So make sure that you are looking at all of the different avenues and options that are available to you.
Nice.
And like I say, mortgage and rent come first. You do not want to repo,
Yeah.
and you do not want to charge off
Yeah.
when you're dealing with credit.
Yeah.
Those are the things that will hunt and hurt you for so long.
Yeah.
So make sure that you do it. And you don't get away, okay? Because what happens is when you run into the fact that you want to buy a house or you want to do something like that, the mortgage company says, yeah, well, we're going to lend you the money, but you got to pay this charge off on. So these are all things that you have to think about. You're not going to get away with it. It's not going to go away, and no one's going to forget it. It becomes a part of your life for a long time. So credit is a very, very good thing, but you have to be extremely responsible.
Yeah.
And you have to understand exactly what it is you're dealing with. And you know what? When you get a credit card that's charging you 22%, which is unbelievable to me, but
Here we are.
Here we are.
Here we are.
You know, I just mentioned the bill. I got a city credit card that is literally 22%. I got an 800 credit score.
Yeah.
But I'm not going to use that card.
Yeah.
Because of that reason.
Yeah.
I got a GTE card.
Yeah.
That's 11%.
Yeah.
Guess which card I use.
Yeah.
So always try and be smart, but it's never free money. You're always going to pay it back, okay? And you're going to pay it back with interest, and there's no pun intended on that. So be prepared.
Speaking of paying and what's going to help you build or repair your credit the fastest when we're talking about credit cards.
Yep.
I overheard somebody, this was a couple of years ago, but they were saying, I'm building my credit because I'm using my credit card and then I'm paying it right off. But they literally would go to the gas station, swipe the card, pump the gas, go on their phone app, pay it off.
No.
And I'm like, no, that's not how that works,
you want to do.
Right?
No.
This needs to post, correct?
Exactly.
And,
So that's
and what posting means is that monthly statement that hits.
Exactly.
So on your monthly reoccurring statement, that day that it posts, you can pay it the day after.
Yep.
And they usually give you a grace period of like 21 days or something to pay off the balance.
Yeah.
But
it's not that much, not that long anymore.
Oh, really?
Yeah. So then you have to pay by the due date.
Yes.
Or there will be a late fee the day after.
Yes.
Okay, so you have that. Now, it doesn't affect your credit score until you are 30 days late. That's when you want to make sure.
From the posting or the payment date?
From the payment date. That's what the bank is driving on that.
Got it.
But to your point, getting it and then paying off as you go is not the answer, because that doesn't show you're building credit.
Not recording. Yeah.
That just shows that you have the money and you're using the card. Okay, so. Now, you are also, when you do wait to the posting date and you pay off the card, it's a wonderful thing because you're getting a float on the money. You are the credit card company's worst nightmare because they don't make any money off of you.
Exactly.
Because you're paying it at the end of that month. They don't make any interest, and they floated that money for you. And that is exactly what you want to do in life.
Yes.
Because now you're using their money. It's the same thing that the bank does to you.
Oh, yeah.
When you bring a check in for $5,000, I know.
Tell us the secrets, Larry. Tell us the secrets.
This is insane. I literally, in my retirement, made some changes, and I got a large check for $20,000. Okay?
And you're busting my balls about going to dinner? Come on, man. Come on.
Come on. I take the check to GTE, savings account, say, okay, I want to put this in the account, but I have a couple of bills that are actually being paid out of this account that I want to pay off because I'm trying to have as few bills as possible in retirement. And yet, they said to me, well, you know what? We're going to make $600 of this $20,000 available to you now, but you have to wait 5 to 7 days to get the rest of that. And so it's a game. The bank, do exactly what the bank is doing. You can do it with your credit card company.
Yeah.
You take 30 days, you use their money, and then you pay them off. They make nothing on you. What do you heck do you think that the bank was doing with my money? The $19,500 that they kept for 5 days when everything we know is done electronically now.
Yeah.
That's it.
It's just that easy. But for some reason, these large amounts.
And it's a cashier's check from another bank.
Oh, I love that. Larry, thank you so much for saying that because you're absolutely right. They're doing it to us.
Absolutely.
So, it's not, it's, they don't need to make any money off of us.
No.
We got enough problems.
That's right.
We got enough things to pay for.
Exactly.
So like we said, as soon as it posts, pay it off.
That's it.
There's no interest on that. Now, what are some red flags for people looking to get either build credit for the first time or maybe repair their credit? There's a lot of things out there online and emails and, sign up for this and work quick credit repair and all these. What are some red flags to look out for?
So, a couple of the red flags that you really, really want to be afraid of. And the first one I'm going to start off is payday loans.
Oh, thank you. Thank you for bringing this up.
Because Amscot may be a big company and they've got big, beautiful places that you can go into, but that is a never-ending cycle that you get into because all of a sudden now, and you know what, it doesn't feel so bad. They're going to lend me $500 and I only got to pay $50 back, but you got to pay it in a week.
Yeah.
That's over 500% interest.
Yep.
Okay, when you're doing that. So think about that before you do that. That is not the answer. You would far do better to get to swallow your pride and call a family member.
Oh my God!
And see if you can borrow from before you go to AmScot. Okay. The other thing that I want you to be very, very leery of, because you're hearing all the radios, you're seeing all the TV ads on all these quick lenders who are saying, okay, you know what, we can help you out even with bad credit.
Yeah.
These are predators.
Yes.
Okay, what they are going to do is, yes, they're going to lend you the money, and it's going to become impossible for you to pay it back. You would do better to find a mafioso and go and get yourself from a loan shark, because the rates are actually going to be better. Okay, so
Larry's views do not align with the Break That Cycle podcast. We are not condoning reaching out to any mafiosos.
Exactly. Yeah. But you get the point.
But it is. It's
Get the
legalized
point.
racketeering.
It is legalized racketeering, and the government is not doing enough, in my opinion, to stop this, because here's what happens, and this is my theory, and I'm going to bring banking into it as well as the predators. One of the things that the banks did recently was that they decided that they were going to change the way they charge fees on bounced checks. Okay. So originally, a bank would say, okay, you know what? You've got so much money in the bank. You've got 7 checks that popped up. The biggest one is probably your mortgage. We're going to pay that one. So they pay the one check, but now the other 6 checks would bounce, and you'd pay $35 per bounced check. Okay? No. Whereas you would have had enough money in the account to say, okay, you know what? I could have paid all of the other ones, had the one bounce check, one $35 fee, and had to deal with it. They changed that rule. Okay, for the better, because what happens is, who gets affected by that the most? It's the lower income person who all of a sudden he's got 5 bounce check to $35. Where's he going to come up with $270 to make up that difference and get nothing for it in return? Okay, so that is one of the things that I would love to see someone do in this predator industry with these loans, because these interest rates and now the amounts are getting staggering. That they're offering $5,000, $10,000, $15,000, $20,000 at these types of interest rates, and the person who's going to get hurt the most is that lower to middle income person who thinks that they're bailing themselves out, and they will put themselves in a never-ending cycle. So to your shirt, we need to break that cycle.
No, you're absolutely right. It's very predatory. And when I talked about the ladies that we have with those $600-$700 a month car payments, I think the same of those people. That's predatory. You can't do that to somebody making minimum wage with 2 kids and expect them to be able to hang on to this. And I want to come back to that, because you had started going into the poor to the good to the excellent credit rating. And I don't know that a lot of people know this, and I didn't know this until, I mean, honestly, a few years ago, if I'm being completely honest with myself, is that your credit score will affect the interest rate that you get when you go to buy a car.
Absolutely.
Okay? And everyone, I've heard it a million times, right? Everyone says that. I didn't know what that meant. Okay. So if you, there's an online auto store called CarMax. I've purchased from them before. They have one of those online calculators, right? And you can put in how much of what the type of vehicle you're looking for. Just put in, $30,000, and then use an interest rate that's at a 5% right now, which is probably the going for a used car. And look at how much your monthly payments are. Now put in a 15% interest rate if you have low credit, and see how much those monthly payments are.
Unbelievable.
See, they don't tell you about that when you go to that dealership down the street across the pond, and they say, "Oh, well, this car is it's only $20,000. It's only going to cost you X amount of dollars a month." They're not telling you how much the financing is going to cost you, and that's how people get buried under these things. Because just like a house, most of those payments that you're paying on the first few years is all going to interest. You're not paying off that car at all.
Nope. Yeah. And so here's the problem with that. So your credit from 550 up, there are 2 things that you'll be able to do. You'll find someone who's going to let you buy a house. Okay. But your credit, all right, is going to be right now. I think we're in the 6s for a mortgage. Okay. You could be looking at anywhere from 11 to 15% on a mortgage. Think about that as a payment adjustment from a person who's paying at 6%.
Yeah.
So, and cars are the worst. Okay, because that jumps so much because it's regulated, but it's not. So now all of a sudden you go in and I'll give you an example. You go in and you got an 800 credit score, you're going to be at 5%. Okay, maybe a little bit lower, you might get a better deal. Okay, you get in that 600 to 700 range. Okay, you're probably going to be looking at a 10 or 11%.
That
it can make that much of a difference, and it all depends on the dealer that you're at and what they're doing. Because never forget, at the end of the day, the dealer doesn't care about your payment.
No.
All he wants to do is get that car out the door. And here's the predatory part that I don't like with the dealers, is that they don't ask you anymore what you want to spend. They ask you, what do you want your payment to be? Because they can manipulate the numbers to make that work. Be aware that, when you got to buy a house, you're going to get a 30-year mortgage. That doesn't change. But if you're looking at buying a car, there's a big difference between having a car that's on a 3-year loan, a 5-year loan, or a 7-year loan, or now even 10-year loans. Because the car is going to depreciate so much, you will never make up the difference. When you go to trade it in, you'll be upside down.
I totally forgot about that. You just reminded me. We talked about this a couple months ago, and I was completely pissed off about it because they're going to take advantage of people with that. And you're absolutely right. That car is going to be worth absolute shit by the time you're done paying it off.
Absolutely.
You might as well just lease.
And you know what? If you can do that, and I've just having this conversation with my daughter, who happens to lives in Philadelphia, against
Good
my wishes.
for her.
But she does very, very well. She's medical coding for Temple Hospital.
Nice.
And but she was like, Dad, I don't know whether to buy or lease. I was like, honey, you don't drive. So I mean, you can lease. If you want to go to Jersey to visit your cousins or whatever, that's fine. But that's the right thing to do in that case. And at the end of the day, no, you don't own the car. Okay. 3 years later, you decide whether you want to buy that car or whether you want to get another one, and you have options. And usually the lease is going to be a lot less than what your payment would be. And then you turn around and you're not getting anything back for it anyway. There is nothing worse than walking into a dealership and trading in your car, finding the car that you want to buy, and then you find out that you're $3,000 or $4,000 or $5,000 upside down that they're going to tack on to the new car.
And finance that too.
And don't forget, that's for people that are in a good place. The person who's not in a good place, you're not going to get that option. They're going to rake you over the coals.
Yeah, absolutely. We're going to take one more break. On the other side, Larry is going to help us pick out some scams, teach us how to protect our money and make sure that we can keep our money instead of making people take our money. We want to keep our money, right?
We work hard for it. We want to keep it.
Exactly. We'll be right back. We want to talk about protecting our money. Damn it, I work hard for my money, Larry.
Right.
I want to protect it. And one of the biggest things, and we see this a lot at the shelter at Mary and Martha House because people get taken advantage of, right? And they get hit with scams. We had one shelter resident a few years ago who was getting ready to move out of her parents' house. She had saved up $5,000. She was ready to move out. Down payment for the house, send it here, blah, blah, blah. She goes to visit the house. This thing doesn't exist. It's a vacant lot. Nothing there. $5,000 out the window. Luckily, she found us. We were able to help her out. She built her bank back up. And we checked on the next place that she was going to. So we can pick those things out, but there's tons of scams out there. And you being so so recently removed from the financial industry, what are some of the big scams that you see, or that you did see going on currently?
Like I said, I mean, that is part of the biggest thing. First of all, and I'm going to stress this. This rule sounds corny, but it is absolutely the truth. If it's too good to be true, it is not true, okay? But these fraudsters out here right now have become so sophisticated in the things that they are doing that you really, really have to double check and be so careful with what it is that you are dealing with. And I'm going to give you a couple of different things. You use the example of the house scam. You know, that's one of those things where they're just trying to get the down payment. They know there's nothing there. You really have to do your research. You want to get a realtor involved, okay? Someone who's knowledgeable before you send your money anywhere for any reason.
It is going to cost a little more, but it is worth it.
It is worth it because you're gonna know what's necessary. You're gonna know that the house that you're buying, because let's face it, that's a lifelong dream, and then it becomes a lifelong commitment. So you want to make sure that you are getting what you want. You've worked hard, saved that money. And in this day and age, buying a house is still a heck of an accomplishment if you get that far with closing costs and everything else that's going on. So do your homework, get reputable people, and do not be afraid to ask advice, whether it's from your banker, okay, if you're banking, okay, whether it's Bill. It may not always be the best advice from Bill, but you should ask anyway.
I got advice. I never said it was good.
But the other thing that I really want you to be very, very leery of in this day and age is that the emails and the text messages and the things that are now coming through are so sophisticated you cannot tell the difference. So there are three things that we talk about in banking, okay, with our clients. And I was a commercial banker, so I dealt with a lot of business clients, is that, number one, if there's a urgency or a call to action or you have to do something now, that is the biggest red flag that you can get.
Good point.
Okay?
Yeah.
So you want to make sure. Second thing is if it's an email or something along those lines, you want to check the email addresses.
Yes.
Okay? Because that's usually a dead giveaway because that's the hardest thing for you to disguise. So you can check that.
And I wanted, so we use Microsoft Outlook here, right? And it'll have the person's name. But if you open up the email and you look next to it, it'll say, we'll just use Bank of America. It'll say Bank of America, and then it'll have the email address, which is WXPYF3H4 dash whatever. That's not a real email.
That's not a real
right?
email. Exactly. So don't get caught up in that.
Don't just
scam.
look at the name. Look at the actual email address.
And 9 times out of 10, and in the old days, you used to say look for misspellings and things like that. But they've gotten so good that you can't trust that anymore. The other rule of thumb is if there's a link in an email, a text message, or anything like that, you do not click on that.
Do not click on anything.
Do not click on anything that is sent to you. Because that is the first key. And I share, one of my clients calls me up complaining to me, Larry, I don't understand. There's a problem with my bank account. I just spoke to your person from the bank. Her name is such and whatnot. I go in the company directory. There is no such and such, person. But this person was so good on the phone that she had the owner of this business give up his password, and his name, his client name, username, in order for them to fix the fraud problem because someone was allegedly trying to break into the account.
Wow. Well, they were.
Yeah, they were.
And
but
they
it
succeeded.
was them. But they did.
Man.
They were able to we put an end to that. So you have to do that. The other thing I want you to be very, very alert of is these new QR codes, where you're scanning and you're taking a picture of it and it's sending you to a link. So I don't do that anymore either because some of these guys have gotten so good that they're literally changing that QR code and it's sending, that link is sending it to them. Wow. So here's my suggestion to protect your money at all costs. Number one, like I said in the very beginning, if it's too good to be true, It definitely is. There is no Arabian prince that has a $7 million lottery ticket that is waiting for
Has
you.
your name on it, yeah.
Yep, has your name on it. And I just got one of these recently.
Did you?
It's so funny.
Yeah.
Yep. So do understand that. The other thing that you want to do is double check your email. Make sure, look for the email addresses, look for any misspellings, look for anything that might give it away. But you can't trust it at all, because now they're even using logos and everything else that are so realistic. So if there is something that you want to check, you always go directly on the HTTPS.
Yep.
So it is not the link where you put in the actual web address
You're
yourself.
absolutely right. Any text, any email that you get, and I get them frequently. USPS, there was a big scam. UPS that was going around, FedEx. And then even with the bank, if I get a text or an email from my bank or any of those delivery services, and the new one was, we can't deliver your package until we verify your address. Click here to verify. No. First of all, I don't expect any packages. That's my wife's thing. She's the one ordering on Amazon. That's her problem, not mine. So, but I will, if I get one from my bank and they say, click here to update, No,
do not.
I will go into the app, or I will go to the website myself.
Absolutely.
Don't ever click. You're absolutely right.
Ever click on that, and it's because that is where the problem lies. And the other thing that you need to do, and this literally just happened to me this week, check your statements, whether it's your bank statement or your credit card statements. As Bill mentioned earlier, I just retired, but I did just come back from a cruise. And I happened to be looking at the account that we use for that account, and all of a sudden I've got a $316 charge for a hotel in Colombia.
Nice.
Yeah, in pesos, it's $1,146,000.
Look at you go. How much was the flight from the cruise to Colombia?
Well, exactly.
Your wife didn't miss you, clearly,
not
right?
At all.
Yeah.
Apparently, not at all. So I call up my wife because she actually was staying at a Airbnb because she was in a tennis tournament when we got back.
Okay.
So I said, did you use the card? She's like, no, Larry, we paid cash with the girls that we're staying with to do that. So I had to dispute that charge right away. So you have to watch.
Yeah.
So someone at Disney Cruise Lines, an employee or whatever, took the number and is now using it, for their hotel room in Colombia. You need to make sure that you double checking everything.
Yeah.
But rule number one, too good to be true, it is. And the most important rule, don't click on anything. You either call the company yourself or you go on their website yourself. You don't click on any links, because that is the way. And it can be devastating with identity theft or to have this. It takes time to get that money back.
Oh, my God, yeah.
And most people are not in a position that they can wait for that time, especially the folks that are changing their lives or doing different things. You get hit for $300, it could be life-changing.
Yeah. And also, when you said call the company, that made me think sometimes with these messages, they'll be like, call this number.
That number.
Don't call that number.
That's right.
Google the customer service number.
And get the number.
And get the number
because
yourself.
They have gotten so good.
Oh, yeah.
You dial that number and they'll think it's the company.
Yeah.
Okay? And it's insane.
Yeah.
That they've gotten this.
Oh, they're crafty.
So fraud has become we have companies who literally have to protect themselves. I had a customer had a check whitewash. This is another thing too. If you're writing checks, please try to stop. Use your online banking app. Okay, because you have online banking allows you to send your things out.
Sure, the bill pays,
Because what happens with that is if they have to send a check to a customer of yours or someone that you're paying, they send an encrypted check, a check that does not have your account number on the bottom. So it's not. Every time you write a check and you put it in the mail, that's your account number and the routing number at the bottom of that check. Okay, and any person can take that, literally reproduce checks with your account, create a different ID.
Wow.
Okay, and then walk into Walmart, and this is a true story. One of my clients, literally in the auto repair business, I happened to be walking in to do a visit with them, and I'm going in to see the owner. And as I'm walking in, his CFO walks in and says, "Hey, are we buying TVs or stuff for the employees?" It was Christmas time.
Yeah.
And the owner looks at him and says, "What the hell are you talking about? I don't know what you're talking about." He says, "Well, we got all these $1,200 expenditures at Walmart, and it looks like they're for TVs."
What?
Someone had taken their check. We think that a check went to one of their vendors.
Yeah.
Okay. That person taking the check created a checkbook with that routing number with a different name on it. Okay. And was out writing checks and buying TVs at Walmart.
How have we not remedied the account numbers on the check thing yet?
Because that's the system reads the account number, and that's the way that works.
So stop using checks.
So stop using checks if you can. And like I said, that's why I highly, highly recommend your online banking app has the bill pay feature.
Yeah.
I do all of mine that way.
Yeah.
Okay. Because even if they do have to send a check and it can't be done electronically, it's okay because it's not my number.
Yeah.
I try and not to write checks at all.
And it is actually less work. You're not spending on stamps.
Exactly.
You're not.
No, and when the bank has to send it out, they spend the money on the stamp, so it's better for them. You're banging the bank again.
So still want to keep on the protections, and I want to go to protecting your identity when it comes to these types of things. And you brought up a good point off camera about turning your credit on and off.
Yep.
And there's a lot of people, and I didn't know about this until just last year. Can you go into that a little bit?
Sure. So here's what you definitely want to do, and I just did this. I wish I could tell you sooner, but it's probably been 3 years. So in Experian, TransUnion, and Equifax, there is a feature that allows you to put what's called a freeze on your credit report. And what happens that way is that no one can go in and apply for credit and get a credit report getting your credit score. So that is very, very important because that's what these fraudsters are doing. They are going to go in, they're going to apply for a credit card, they're going to get a $10,000 limit, and then they're going to go and blow through that. Now all of a sudden you have to prove it wasn't you.
Right.
Okay?
Which is hard.
It is really, really hard to do, and it is also time consuming, and it's on your credit report. So my suggestion is this, because it's very, very easy to do. And I had an incident today where I had to unfreeze it. So, and it's easy to unfreeze as well. So when you're applying for credit that you can, go to each of those agencies.
So it's
Equifax, Experian, and TransUnion are the three that all the different companies are going to use. And I recommend putting the freeze on all three of them because you never know what company, which one of those, the company that you're applying for credit for is going to use.
Sure.
So yes, it's a little bit of a pain in the neck when you go to unfreeze it because then you got to ask the person, well, which one? I don't want to unfreeze all of them. Do you guys pull TransUnion? Do you pull Experian? Do you pull Equifax?
But worth it.
Yeah, but it's definitely worth it because guys, you want to make sure that no one has access to that credit report. The credit report is the driving force that allows credit to be allotted to a person. So if they get to that, then you can do that. And for the 10 minutes it's going to take you to freeze each of the reports, it is life-saving from that standpoint.
Yeah.
Make sure that you do that. There was something else that just popped into my head that I wanted to mind that had to do with fraud. Now all of a sudden I can't think of it.
That's okay. It happens at your age.
Yeah, it does. Yeah. And then you know what? More than I'd like to admit.
Well, maybe it'll
pop
come
back
back.
in.
Maybe it'll come back.
Yep.
But let's talk about smart money moves when it comes to protecting yourself. Are there, I guess, any glaring areas of tips that you might be able to give people to make sure that they are using their money the smart way and protecting themselves? Freezing the credit is fantastic.
Critical.
Now, one question that we may have, is there a limit on how many times you can freeze and unfreeze?
No.
Okay.
So you can unfreeze your credit report at any time for the period of time that you want. I just unfroze mine today for 24 hours on one of the credit bureaus. because we were doing something that required credit. And that is the advantage that you have, that you can do it as many times as you want, and you can do it in the app. So you can do it on your phone, okay? And that way you don't even have to call anyone or sit and do a customer service or any of that stuff. You can do that, and it's not a problem, and it's just so important and to safeguard you. And that. And then to your point about what to do, and this goes back to, I think my original point is all about savings. So some of the things that you want to do is open that savings account. But you know what? If you are working and your company has a 401k program, you need to invest in that.
Sure.
And you need to figure out whatever the match is that your company is. If a company does a match, whether it's 3% or 4%, at least do that minimum. Okay? Because what happens is that you don't miss the money you don't see. No. And it's growing behind the scenes for you.
And twice as fast.
And twice as fast.
And only half of it was yours.
That's exactly it. And that's a beautiful thing. And, I would love to sit here and tell you that, I was the smartest guy in the world, and I knew all of this when I was 25 years old. But I didn't start saving for retirement until I was 42 years old. And I got lucky. Okay? So that's why I stress with everyone right now that those are the keys. You are getting close to retirement age before you know it. And then, you know what? If you don't have anything, and I know a couple of people who have worked their whole lives, you're not going to make it on Social Security, guys.
No.
Make no mistake about it.
No.
And so put that money away. Don't touch it unless there's a really, I did go into my 401k to buy my first house. Okay. Like I said, I waited till I was, 39 years old to buy the house, and then started saving at 42. So you can still get there, but if I had done it 10 years earlier even my God. You know what? I wouldn't be sitting here with Bill right now. I'd be out on my my Caribbean island somewhere.
No, I would be right there with you. Shoot. So one way or another, I'd figure out how to get that. Yeah,
exactly.
So and here's the thing, though, Larry, is that all sounds great, right? You're in a position to where you're able to retire. You've worked your butt off, and you've been able to make smart moves up to this point. There are people out there in their late teens, their early 20s, even into their 30s. I didn't understand banking even at 30. And that shit is overwhelming. Okay. When you 10 years ago, if you were to talk to me about retirement, it didn't compute. Because in my mind, I was going to die on the job at some point because I didn't know what retirement was. And now I'm making strides to get to that point. So, but again, a decade ago, very overwhelming. I could not wrap my head around it. I didn't even know what credit, what debit was, none of that stuff. So somebody who's in that position that is just learning, just figuring any of this out, and maybe everything we've talked about today is brand new to them. What steps can those people start taking to ensure that they're going to have a prosperous future? Maybe not glamorous, but maybe just taken care of.
That's it.
What steps can somebody take, or what kind of mindset should they go
the mindset is, and I'm going to say this, and I'm not joking when I say this, don't be like me. And the reason I say that is because, as I just mentioned, I am an accidental that I'm getting to retire in the style of life that I'm not changing my lifestyle, basically. But that was an accident. I got lucky. That doesn't happen for everyone. So savings is critical. I don't care whether, like I said 3 or 4 times, as we've done this in the other segments, it doesn't matter whether it's $5, $10, $50, $100 a month, a week, whatever you can do is so important. The 401k is critical because you know what? You don't have access to that money, and you don't have to do anything with that. It's working for you behind the scenes and growing. And I will share with you that, when we had the major fallout in 2008, and I called my 401k a 101k because we lost so much money during that period of time. What you have to realize is that over the long haul, it's going to grow, it's going to develop, and it's going to be money that you would have never had trying to do it on your own. And if you are fortunate enough where you have an opportunity to begin to invest in other things, there are things that you can do. Talk to an investment person to see, because those are other ways that you can go about it. I wasn't in that position to be able to do that. It was a 401k and savings that did it for me.
Yeah.
But if you're in that position, there are many people that make that happen. But like I said, savings is the major key in controlling and understanding your credit. And those are the things that I wasn't taught as a young man. Those are things that Bill wasn't taught as a young man.
Yeah, which I still am, unlike you.
Yeah, I know. Yeah. Well, you're younger than me. I got people that wouldn't say that you're young either, but that's okay. It's all relative to the age you're talking to. But that's what you have to do. And the earlier you start, the more enjoyable the end of your life is going to be, because you're going to be able to do the things that you want to do. And there isn't any reason to bust your ass all these years and then still have to worry about money when you get to be 65, 70 years old.
Yeah. Brilliant. I mean, that's pretty much what I've learned over the past few years, and you've helped me through a lot of that.
Thank
so
you.
I appreciate you taking that time with me, and I'm glad you were able to do this with us, because hopefully this can help some other people that are out there listening or watching.
I hope so.
Because again, information that we never knew.
Never knew.
We learned the hard way.
Don't be an accident. Make it work. That's all I'm saying.
Yeah, Larry, I appreciate you coming out, man.
Well, Bill, actually my pleasure. I thank you for asking me to do this. And you know what? If I can be of help in the future, anything that I can do, I'd be happy to help.
I appreciate that. But I need to know, how many tea times do you have booked this week?
This week, 2.
That's it?
That's it.
Dude, you're retired. What are you waiting for?
My body is retired too. Twice a week's enough.
Fair enough.
I got a garage to clean and a closet to clean out. I got other things to do. So,
well, good luck with that.
Thank you.
Enjoy retirement,
I will.
and I know I'll see you plenty of times.
Yes, you will.
Yeah, so,
yes, you will.
All right.
Yeah, when I'm looking for a job, don't forget.
I don't pay.
Yeah. I wish he was kidding, but he's not.
Thank you, Larry. I appreciate it.
Thank you so much, Bill.